Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. With us, Reggie Middleton of the BoomBustBlog.com. He's an entrepreneurial investor, has made a lot of right calls on his site and publicly. Reggie Middleton, thanks for being on USAWatchdog.com.
You're very welcome.
Well, last week, the Fed, Plosser, one of the Fed presidents, has said that, if the EU's unlimited money printing doesn't work for them, we're going to be all in over there as well. What do you think about that? Frightening to you?
Well, I call it a real-time experiment. It's like Dr. Frankenstein and the Frankenstein monster. To my knowledge, and I'm not a historian and I'm not a know-it-all, but there has never been a time in the history of the world where the entire world decided to print ad nauseum. I just don't see a positive end to this. It's an unknown. I think a more direct solution would be, again, to allow the insolvent institutions to fail and start from scratch. It's a good chance that the insolvent institutions are going to fail, and we're going to end up starting from scratch anyway. Sans $48 trillion /euros/yen, /renminbi that was spent trying to prop the institutions up in the first place, and all the negative consequences thereof, such as an inflationary run, a stagflationary run that's out of control of central bankers and policymakers worldwide, which seems to be the most likely case. The reason why the green light is given in print is that we're currently in a very deflationary state. So central bankers such as Draghi or Dr. Bernanke say that there's no fear of or worry of inflation right now because we're in deflation. That is true, but the border, the path from deflation to inflation doesn't come with a rep map. So when you do pass that border, can you control it and pull everything back in time? Well, if you look historically, has it ever been done? Not to my knowledge. It has been done successfully once. What makes all the central bankers in the world think they're better than everybody else in the history of the world is beyond me. But again, that's not really their thoughts. Their thoughts are basically they're experimenting. This is a real-time experiment in trying to prevent a true deflationary spiral and crash. But the only way to get to the other side of the economic cycle is to go through the downside. We have people who want to get to the upturn without going through the downturn, and it just doesn't work. There's a saying, we just came up with on the site, either you believe in magic or math. And, we're believers in math on Boom Bust Blog, but it appears that the central bank is trying to convince everybody that magic is, the term du jour. And, magic simply doesn't work. Even Harry Potter has problems.
Even Harry Potter has problems. And you're saying the math says that we're going to have inflation, that they've never successfully not had inflation by printing money, and this is a global phenomenon.
Well, the math says that you have insolvency, and that's the deflationary issue. And the math says you simply cannot cure the insolvency by adding more dollar bills without adding value. The insolvency came from the fact that a lot of debt was taken on, right? And the assets that backed that debt decreased in value significantly, with the debt, remaining pretty much status quo. And so you have balance sheet insolvency. You also have income statement, cash flow insolvency, where you have more expenditures than you have income. Okay, and math simply says, 1 minus 2 is not a positive number. That's insolvency. The math says 3 minus 4 is not a positive number from a balance sheet perspective. That's what the math says. The magic says, well, if we chop all the dollars up into more dollars, we'll solve the problem. You solve the liquidity issue. Okay, but the liquidity issue is short-term, and the liquidity issue is a symptom of the problem, which is insolvency. It is nowhere near the problem itself, and curing a symptom does not cure the cold.
And the only way to fix it is to take these guys into receivership, find out what their real assets are, and start over. But a lot of people won't get bonuses, and there'll be a lot of people fired. Now, won't there?
They'll get fired when they blow up as well. Either you have a blow up now, or you do a very, very slow deflationary unwind over 20, 30 years. It's very difficult. You can't fight Mother Nature or Mother Economics. Maybe it's father economics.
0% interest rates, the central bankers say this is good for banks. You say, bad for banks. Explain.
It's bad for bank business. It's good if you have a bank's about to blow up. It does save the bank short term. Okay. They started instituting zero policy, 2008, 2009. It's now 2012. Is the banking industry strong? Not even close. Worldwide. Okay. It cannot be a modus operandi of doing business. The ZERP is used to prevent the banks from simply exploding. Okay. Once you do that, then you have to fix the problem. For some reason, it appears that ZERP seems to be the solution to the problem, and that's why banks can't make money. Banks make money by borrowing money and lending it out for more, at least traditional commercial banks. Okay, so if you borrow money at 0% and you lend it out close to 0%, there's no spread. Okay, and so they're very difficult to make money. Now, those banks that actually do transactions have a slightly different business model. But ZERP has a problem there too. When you bring the cost of capital to zero, the cost of capital is basically the price, of the risk of using that capital. When you bring it down to zero, the capital is not respected. Nobody's going to respect the money if they never paid for it. So you have reckless endangerment from a perspective of the steward of capital. And you have things such as the debacle with the mortgage and the credit crisis, etc. Things that were done if there was a true cost of capital and a mistake would be made that would actually take a significant loss would not have been done when the cost of capital is close to or approaching zero. And we've created a situation where there's simply no punishment for an egregious action or an irresponsible deed. You lose the money, you haven't paid for it, you're back where you started from.
Finally, the European experiment. A lot of people say it's going to make it, it's going to do well, but you're saying no, it's toast. The EU, that currency.
I've been saying it since last quarter 2009. I think right now most people realize that the EU is not going to work as is. Again, you have the insolvency issue. 3 minus 2 does not yield a positive number. And you have a significant amount of the European nations who are insolvent. Some of them insolvent both from an income perspective, cash flow perspective, and from an asset liability perspective. There's no way for it to work unless economic activity spurs and then values increase, and then they somehow increase both cash flows and asset values. But with the world going down into a recessionary spiral and almost every major developed nation either in depression or approaching depression, in recession or approaching depression, or best case scenario is a hard landing, which is what a lot of people are predicting for China, which is highly unlikely. China is going to a recession, best case scenario, in my opinion. There's no outlook for the type of economic activity that can spur enough cash flow or asset value appreciation to pull the world out of a recessionary spiral. And again, part of the reason why we've been in this recessionary spiral this long is because the powers that be have refused to allow market pricing to actually work. They muddle and confuse market pricing to allow insolvent entities, whether they're nations or companies or banks, to muddle along, but without actually collapsing. So that saves those oligarchs who will control those particular entities, whether it be nations, financial institutions, or companies, but it destroys the economy in general. So you're basically sacrificing the majority to keep the minority in place. And the problem is you're keeping them in place, but it's it's a definite period of time. It's not indefinite, it's but so long an entity that cannot cover its cost of capital can remain in business without assistance.
Final question, is the dollar gonna die?
I don't think so. A lot of the doom and gloom is on the dollar. And listen, I think I was one of the early new media alternative news proponents or analysis proponents who were very, very negative on the U.S. economy, housing, commercial real estate, equity markets, etc. But and the U.S. has significant problems. Our problems are very similar to many other problems, except for a couple of big positives. The biggest positive is, even though we're the reserve currency, we have issues. Let's suppose the dollar does die. Exactly what is adopted after the dollar? Is it going to be the euro? with Europe essentially falling apart? Is it going to be the renminbi, with China's numbers untrusted by practically every observer possible? Is it going to be the yen? You know, with you're talking maybe 300% debt to GDP ratio, Japan. You know, if you lose the dollar, if you move from the dollar as a reserve currency, you know, where do you move into? Remember, this is all a relative game. You know, I think the U.S. is in horrible shape, but it's in excellent shape compared to some of its competitors. And also, if you look historically at reserve currencies usually had a very high correlation with who had the most militaristic might at the time. And currently, that's still the U.S. from a militaristic perspective, from a geopolitical perspective, and from a technology and economic perspective. Now, of course, it's definitely not going to happen. All empires fall and crumble by definition. Okay, but when and where it's important. I don't think it's time for the U.S. to crumble just as yet.
We're a sick king, but we're still king. Reggie Middleton from the BoomBustBlog.com. Thank you for being on USAWatchdog.com.
You're very welcome. Look forward to coming back.